Hey everyone, welcome back to Corporate Decoder. Today, B.E.R.T.O Acquisition Corp, SU just filed a Form 8K report, and I am seeing the immediate aftermath of their big IPO. Quick note, this is not financial advice, just my take on public filings for educational purposes. They recently closed their initial public offering, and this filing is basically confirming the money raised and what they are doing with it. So this is an 8K filing, which means something pretty important just happened that the company has to tell the public about right away. In this case, B.E.R.T.O Acquisition Corp, the SUC, or B.E.R.T.O, has just finished its initial public offering, or IPO. Think of an IPO as the moment a private company decides to sell shares of itself to the public for the very first time. It's a huge step, and this filing is all about confirming the details of that event. The report is dated May 18, 2026, and that's the key date. It tells us when this whole IPO thing officially went down. This is the company we are talking about, B.E.R.T.O Acquisition Corp, the GUACU. They are what's known as a Special Purpose Acquisition Company, or SPAC. SPACs are a bit different from regular companies. They basically exist to raise money through an IPO with the sole purpose of acquiring or merging with an existing company. So, B.E.R.T.O Acquisition Corp SPAC itself doesn't have a product or service yet. Its job is to find another company to buy or combine with. It started its life in the Cayman Islands, which is a common place for companies to incorporate. This number here, 001-43,293, is the company's official file number with the Securities and Exchange Commission, or SEC it is like their unique ID card at the SEC. And this 9-digit number is their IRS Employer Identification Number. For a company, this is like their social security number used for tax purposes. Scroll 1180 Northtown Center Drive, Ive Suite, 100 Las Vegas, Nevada 89,144 Scroll, while they might be incorporated in the Cayman Islands. Their principal executive offices, meaning where the main operations are managed from, are located in Las Vegas, Nevada. If you needed to call them directly, this would be the number. Now, this part is important because it tells us what kind of shares the company is offering and where they are being traded. SPACs typically offer units, which are packages of different securities. This first one is the units. Each unit here is bundled into one package. It contains one ordinary share of the company, which has a very small face value or par value of $0.0001. Alongside that share, you also get 1/3 of a redeemable warrant. A warrant is like an option. It gives the holder the right, but not the obligation, to buy shares at a certain price in the future. And the ticker symbol for these units is GUACU. This is what you'd look for if you wanted to buy or sell these units on the stock market. These units are traded on the Nasdaq stock market, which is one of the major US stock exchanges. Next up are the ordinary shares themselves, separate from the units. These are the actual company stocks. Again, the par value is just a nominal amount. The ticker symbol for just the ordinary shares is GUACU. These are also traded on the Nasdaq. And finally, we have the warrants. These are the ones we mentioned as part of the unit package. Each whole warrant allows someone to buy one ordinary share. The ticker for these warrants is GUACU, and these two are listed on the Nasdaq. So the company has created 3 different ways people can invest in it right now: units, shares, and warrants. The company checks this box indicating it is an emerging growth company. This means it qualifies for certain relaxed reporting requirements under the law, which is common for newer public companies. This section, Other Events, is where they lay out the main news. Here it is, the big news. On May 18, 2026, B.E.R.T.O Acquisition Corp, the SUD, which they refer to as the company, completed its IPO. They sold a massive 3151000 units. And get this, they even sold an extra 4,110,000 units because the people who helped them sell the shares, the Underwriters, decided to exercise their full option to sell more. This is a good sign, as it means there was strong demand for the shares. This just reiterates what we saw earlier. Each unit came with 1 share and 1/3 of a warrant. And these warrants can be used to buy shares for $11.5 each, but only after the company finds and merges with another business. This $11.5 price is called the exercise price. And here is the money shot: the units were sold for $10 each. Selling over 31 million of them means the company B.E.R.T.O Acquisition Corp has just raised a staggering $315.1 million in cash from this IPO. That's a huge sum of money for a SPAC to start with. But wait, to raise more. At the same time as the IPO, they also did something called a private placement. This means they sold shares or warrants directly to a specific investor, not to the general public. In this case, they sold 3.5 million warrants to an entity called B.E.R.T.O Acquisition Sponsor LLC. B.E.R.T.O Acquisition Sponsor LLC is likely a related party, perhaps the main sponsor of the SPAC. They bought these warrants for $1 each, bringing in an additional $3.5 million for the company. Now, what do SPACs do with all that IPO money? A large portion of it, in this case all $315.1 million from both the IPO and the private sale, is put into a special trust account. This account is managed by a third-party trustee, Continental Stock Transfer and Trust Company. The money in this trust is essentially held in reserve to fund the eventual acquisition of another company. Plus, it includes some money that the underwriters won't get paid right away, called a deferred discount. They are also attaching an audited balance sheet, which is like a financial snapshot showing how much money they have as of May 18, 2026, after all these transactions. This is usually a very important document to look at to see the company's financial standing. It is included as Exhibit 99.1 with this filing. This section lists the exhibits that are part of this filing. As mentioned, Exhibit 99.1 is the audited balance sheet. This is a key piece of information for understanding the company's financial health immediately after its IPO. And Exhibit 104 is the cover page data in a format that computers can easily read, which is standard for these filings. Lastly, we have the signature. This report is officially signed off by Robert Yu, who holds the titles of President and Chief Financial Officer of B.E.R.T.O Acquisition Corp, the SPAC. So, what does all this mean for B.E.R.T.O Acquisition Corp, the SPAC? They have successfully completed their IPO and raised a substantial amount of money, $315.1 million, which is now sitting in trust. They also raised an additional $3.5 million from selling warrants to their sponsor. The clock is now ticking for them to find a target company to acquire or merge with. SPACs typically have a deadline, often around 2 years, to complete a business combination. If they don't find a deal in time, the money in trust is usually returned to the shareholders. The key event coming up is their initial business combination. That's when they will merge with or acquire another operating company. The details in this filing primarily confirm the financial inputs from the IPO and the structure of the securities offered. The real story will unfold as they announce their target company. Looking at the landscape, the market for SPACs can be quite volatile. Many SPACs that have gone through this process have seen their share prices drop significantly after the initial hype, especially if the acquired company is not seen as a strong performer. For example, after many SPACs complete their merger, it is not uncommon to see their stock price fall 70 to 90% over the next year if the underlying business doesn't deliver. This is a significant risk for any investor. B.E.R.T.O Acquisition Corp. The C will need to find a truly valuable company to merge with, and that company will need to show strong growth and profitability to justify the capital raised and overcome the typical post-SPAC slump. The $11.5 exercise price on the warrants is also something to watch. If the combined company performs well and its stock price goes above $11.5, those warrants could become valuable, meaning more dilution for existing shareholders. Conversely, if the stock stays below that, the warrants might expire worthless. Overall, B.E.R.T.O Acquisition Corp, the SPAC, has successfully set the stage by raising capital. The true test of its success will be in the quality of the business it chooses to merge with and that business's subsequent performance. The risk I am watching is whether they can find a compelling merger target in this market, and, more importantly, if that target can generate significant shareholder value post-merger. What I am actually looking for is an announcement of their merger target and the financial projections for that business. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.